carefully.
Welcome back, and joining us on the show now is Chirag Sheth. He's Principal Consultant, South Asia at Metal Focus. Chirag, hi, good to have you. You know, as is always the case, just before every U.S. Fed meeting, we do see a lot of choppiness come into asset classes, more so in case of gold, because one, it is the dollar index that starts moving and gold doesn't augur well to hike in interest rates. But the markets do believe that this perhaps is towards the end of the high rate hike cycle. What are you anticipating for the gold prices to do in this week now?
Yeah, good afternoon, Manisha. I think what's interesting for essentially financial market is that post the inflation numbers that came in, the entire financial market went through a recalibration of market expectations, with regards to how the Fed is likely to behave over the next couple of months. And that's why we saw across the board, equities rallied, bond rallied, yields cooled down, and we saw what happened to precious metals. Suddenly from $1,600 prices moved up to $1,800. So there has been sort of recalibration which is happening. Now, what is interesting to see is that, how is the Fed likely to react? While we do expect that the pace could slow down, we don't expect Fed to pivot so soon, because what market is essentially trying to price in is that there could be one more rate hike maybe next year, and then there could be some sort of rate cuts. So I think it is essential over the next 15, 20 days how the Fed commentary comes out, what is its outlook, and as we get more clarity, we'll see price movement, taking shape there.
Chirag, when you look at the gold price range in this year, it has been volatile at its best, nearly $450 of a range in the international markets, and the Indian markets have seen 8,000 rupees of a movement, and on both sides for that matter. What's your sense for the very near term, even if you take both the case scenarios on whether or not we are at the end of the rate cycle, or if we are, how are you looking at the prices moving?
So, Manisha, as you're aware, we've been saying that, market is likely to remain, volatile. We believe that between the highs and lows, essentially, we will see on an average $100 to $200 kind of range, going forward. I think that is likely to maintain because, at higher levels, market is trying to price in slow down. At the lower level, market tries to price in slower rate hikes. So I think there are multiple forces at play at this moment, and we believe over the next 6 months, this is likely to remain, market is likely to remain volatile.
Chirag, what is your best case and a worst case scenario for the gold prices in the next 6 months, let's say, if you have that much of a visibility?
Yes, so see, our base case scenario at this moment continues to maintain that gold prices could head towards, 1,700, 1,650 levels. That is our base case scenario. Okay. However, if there is, a data point which comes out which shows that the economy is slowing down much faster and the Fed is likely to cut interest rates, then obviously the entire market scenario changes to a bull scenario where, we could see 1,800, 1,900 kind of levels, going forward.
Chirag, another buying support comes in from the physical buying, one in the Asian markets, whether it's India and China, and the other is the central bank buying. We continue to see those strong numbers come in here. Are you expecting that trend to continue?
I think central bank buying, is likely to continue. Okay. With regards to physical buying, I think India has essentially slowed down quite a lot post the big buying happening in Diwali and Dussehra. So essentially, we have not seen any great buying happening for India, but some of the other markets, as soon as prices goes down, there is a bit of buying which is happening.
Chirag, very quickly, how do you look at the silver prices also, and what is your range coming in for the next 6 months on that?
Well, Manisha, silver has been a bit surprising. The kind of volatility that we've seen in silver has been a bit surprising. However, we believe that silver prices could have been moved towards $18 to $17.5, over the next 6 to 9 months.
All right. So not too bullish when it comes to gold and silver, both of those commodities. Near term could see some pressure, depending, of course, on what the U.S. Fed does going forward. So next couple of days are going to be important in that sense as well. Chirag, as always, thank you so much for joining us. And with that, that's all the time we have on the show. Business Lunch will take all the action ahead.